Can your rental history help you get pre-qualified for a mortgage? We're going to talk about that and a whole lot more on this episode of Pints with Paul, and we're getting started right now.
Home buyers, especially first-time home buyers. Not to mention you had to have a higher credit score. Well,
Too many buttons to push. All right, everybody. Happy Thursday evening. I'm Paul Lykins with Keller Williams Innovations, or Palm Beaches Paul, your local realtor and guide to the Palm Beaches. And welcome back to another live stream. So, can your rental history help you get a mortgage? Well, today I have a special guest and a friend, Bill Ginty, and we're going to talk about that in a little bit. But as customary, it's always good to have a beverage when we're doing a live stream. So I have myself a Heller Weizenbach, a nice German beer that was actually sent for one of my customers. And they sent me a nice little gift package of some beer. So thank you very much for that, Reno. But today we're going to talk a little bit about the market, what's going on. And so I'm going to knock that out first, just kind of give you some updates about some things that are going on. And then we'll bring Bill on. So Bill and I go back quite a long way. We've done quite a few transactions together. He's a local lender here with the mortgage firm, but I'll bring him on in just a second. So in the news, so a couple things that caught my attention today, looking at the real estate and what's happening. October 1st, Congress is going to, they have some new flood rates coming out. So many people who move to Florida, they're always concerned about flood insurance and do they need it and how much is it going to cost. And apparently they have what's called the risk rating 2.0, which is coming out. And I was talking to a friend of mine today about this. So I'm still trying to get some clarification. But in the past, if you had a flood zone, you'd get quoted a certain price for insurance. And then also you had your elevation certificate. But apparently what they're looking at is they're looking at what modifications people have done to the house to prevent flooding. So there's going to be some changes about that. I'm actually going to have someone from an insurance company come on, pretty soon. I'll get one of the guests to come on and talk a little bit about that. So, but there are some changes coming to the flood insurance. So I know a lot of you are thinking of moving down here. That's something that you obviously want to be aware of. And coming October 1st, there should be, unless Congress acts. They did say unless Congress acts, it might not happen, but it looks like it could happen. So, and then foreign buyers may return in November as the U.S. eases restrictions. So the travelers must be fully vaccinated and have a recent negative COVID-19 test if they're flying to the U.S. But the change could allow more buyers to physically tour homes. So that's good. I know we have a lot of our friends in the Great White North who are looking to come back down here, a lot of investors, a lot of people that want winter homes from up there and abroad. So that will be good if they can get them to actually come down here and start seeing the properties in person and hopefully bringing more business here to South Florida. So just a couple things that I read this morning that I thought were interesting. Kind of feel like I'm doing a news report, just a real poor one. So, all right. So our guest today is Bill Ginty, William Ginty, with the mortgage firm. And I'm going to bring Bill on here. As I said, we go back a ways. We did a video, how to buy a condo, using a program that really never really took off too much. But we did this video a while back, and we actually had a few people call us, and we actually helped a person close on a condo not too long ago. They watched this video and then reached out to us. This is a little clip from that video.
home buyers, especially first-time home buyers. Not to mention you had to have a higher credit score. Well,
so that was a while back. But anyway, let me bring our guest on, Mr. Ginty. Welcome to the live stream.
Hey, welcome, Paul. Thank you for having me here. This is awesome.
Absolutely. First of all,
You got to crack that beer. I see that, and that looks like a really good one. But
helps with the nerves.
I don't know. The commercial. My cousin from Boston. I got myself a. There it is, Sam Adams.
Sam Adams.
Boston Lager, perfect for fall.
There you go. By the way,
Looking
these
forward
people
to
are
that.
not sponsoring this live stream. We'd
Okay.
like them to, but they're not. So,
Yeah.
all right. Well, welcome, man. I appreciate you coming on. So, real estate's been crazy this year.
It's been great.
Yeah.
The last couple of years has been pretty awesome, and a lot of new stuff going on out there.
Yeah, it's been a real interesting market. A lot of waiving of things, I guess, when people are making purchases and they're in a
Waiving of
loan.
appraisals.
Seems to be the buzzword this summer.
You want to know about that?
Yeah, well, we're gonna get into that.
Okay.
Yeah, we're getting that in a whole lot more. But overall, yeah, it's been just a wild market, as everyone knows, and it's been a seller's market, and they're kind of holding all the cards. But you work with the buyers, and what we're trying to talk about today is a little bit about the new program that you and I were talking about before, which is where people who've been renting, which I know there's a lot of renters out there, that they're actually going to look at their rental history and the fact that they paid their rent on time and all that, and how that's going to affect getting a loan. And
yeah, that's extremely innovative. That's brand new. That's never been done before. Fannie Mae is doing it, and they're really excited about that. And we are too, as lenders. They announced this back in August, and I think the 19th of August they came out and said they were going to do this, and now the 19th of September we're actually doing it.
Cool.
So that's very cool.
And then a couple other things that were brought. We're talking about the family opportunity loans, and we said Fannie Mae's new rental and appraisal waiver. So a couple good topics. But why don't you give us a little background of where your years in the mortgage industry, and
Oh, me. So
yeah.
So I went to FAU. I graduated with a degree in business, and that was 1985. And I used to work for Publix. My biggest joke is if I had just stayed with Publix, I wouldn't even be on the podcast right now or whatever, because I'd been a retired millionaire. But I made the bad decision to go into banking back in 1985. It was actually a good decision, but I've been doing banking and finance since 1985. I worked for Barnett. I worked for Nations Bank. I worked for a couple of different mortgage companies, not that many. And I'm now with the Mortgage Firm, which is one of the most wonderful companies I've ever worked for, and has been in business now for 25 years in the state of Florida. Direct lenders.
Oh, there you go.
We underwrite, we process, we deliver the loan, we close the loan, we fund the loan, and in many cases we go actually service the loan. So this is a top-rated company. It's a great place to be.
Yeah, I know you've helped quite a few of my clients out.
Yes.
It's been successful from start to finish. So, and you've been a wealth of information to me, even when it wasn't a transaction that you're involved in. You've been very helpful when I just had a question about something and wasn't sure, and I came to you. So I appreciate that. You've always been there and answered a lot of questions. But I'm
passionate about the industry. So if anyone's got a question, whether you're going to use me or not use me, feel free to give me a call. We can talk. I can tell you what I know. And a lot of times if I do that, people decide they maybe want to use me. And then sometimes I give them good information that saves them money somewhere else. And I'm all happy with that.
Good deal. Well, as I said earlier, it has been a roller coaster of a market for real estate, and I mean, just all sorts of crazy stuff. People going in way over asking price. Trying to get your offer accepted when there's 30 other offers in there, and obviously not everyone has cash. Not everyone has that ability to throw a whole lot of cash at the purchase. They have to finance a home, as do most Americans. So with that, appraisal waivers, that seems to happen a lot. I know it's been with some of my buyers, and we put that offer in, and they're like, well, if you'll waive this, maybe we can get your offer accepted. How has that affected, as far as with you and transactions, the good and the bad of that?
Well, it's funny because, I don't think you mentioned appraisal waiver until you actually had a loan with me on a client a month ago, and you were shocked to find out we weren't ordering an appraisal on the property. And you were like, how can that be? And so when you originate a loan, you put it into the one of two different systems. One is called DU, which is direct underwriter, which is a Fannie Mae government underwriting system, or you put it into LP, which is Loan Prospector, which is a Freddie Mac underwriting system. And when you do that, they have all of this incredible information about your property. Like if you've ever gone to Zillow and you just look it up and you see, oh, my house is worth this, or you go to a website, CoreLogic, and you see that your home is valued at a certain thing. They do all the math in the background to determine whether you're paying a fair price for the property. And if you are, you get an appraisal waiver. And the appraisal waiver just simply says, we already know that whatever you've offered for the property, that property is worth exactly that much, or maybe even more, and we don't need to do an appraisal. And for a buyer, it's a fantastic thing because, first of all, you save $450 by not paying an appraisal fee. That's number one. Number two, you get from day one in the transaction, you get the guarantee that nothing's going to change. Because if you have to order an appraisal, the property may not appraise. But once you get the appraisal waiver guarantee, it says we're good with the property and we're good with the condition of the property. So if there's anything there that maybe don't want the lender to know about, that you're just going to take care of, we're never going to know because there's no appraisal. It's a very good thing, and
I was quite happy.
Yeah, you were very happy. The buyer was very happy.
Buyer happy. Seller was
the buyer, and I think there was a contingency that said they would even pay more if it didn't appraise.
Right.
And they didn't even have to go there.
Yeah.
It was good.
Yeah. No, it was nice. Very cool. That's it's interesting. A lot, like I said, this market, we've seen a lot of things that weren't, normal, that you just didn't really see happen in the other markets that I've been in my 9 years. And but the times have changed, and so transactions have changed along with it, as well as the as-is contract will be changing November 1st. There's some new changes to it. So, matter of fact, interesting. One of them, I believe, if I remember, it was that when you get loan approval prior to, like now, you're obligated to let the selling agent know immediately loan was approved. We got loan approval. And if I read it correctly, and again, I'm just kind of going off some quick read. The new changes, it's going to be you can let them know at the deadline. So if they had a 30-day loan approval and you get the loan approval 15 days early, you're not obligated to tell them until the day that it's due on the contract. At least I think that's what it said. Again, I kind of skimmed over it, but there's a couple changes. There's also going to be some things about appraisals in there, and some other things as far as what's standard, things like mounts to the wall, for TVs and stuff like that. Things that are personal property. They're changing a lot of the stuff. So there's some stuff that's coming out like November 1st. So I'll be going over that in the office. But some interesting changes to the contract, and I think a lot of that's come out because of all this, stuff that's been going on with the loans during this past, 8 months. But interesting. All right. So, well, listen, we started off with talking about, how rental payments can possibly affect someone getting a loan. And you were real excited about that. So Fannie Mae's new rental payment history. Why don't you tell us a little bit about that? And
okay, so I'm gonna do your bad news thing. Here we go. Okay, so here's the headline, and this is interesting. It says Fannie Mae introduces a new innovative solution to help more renters become owners. Okay. Now, this is something that's never been done before. And they announced this back, I think, on the 18th of August, and it became effective on the 18th of September. And today's only the 23rd. So I'm not a computer guru. I'm not a person that knows how everything works on the internet, but this is what's really, really exciting or interesting about this. So if you put on the application that you pay $1,800 in rent or $1,000 or whatever, the new DU system will identify that you're paying rent. And if you've paid that rent for 12 months or more on time with no lates, it searches through the information that you put on your application. So if you bank with ABC Credit Union or Big Bank International, I'm not going to use brand names, it's going to know, and it's going to pick up on your account number, and it's going to search the last 12 months. And if it sees that that $1,800 a month or $1,000 a month is coming out of your account, and you have limited credit, like maybe you don't even have credit scores because you don't use credit cards and you don't have a car loan and you don't have these things, don't be shy about making a loan application, because now this is going to pick up on this, and this is going to say that this is actually a good buyer because they have this history. And not using credit is not a bad, it's not a bad thing. Who wants to be in debt? They penalize people because you don't have credit card bills and you don't have car loan bill or other bills, where in actuality, you're probably a better buyer than someone who's got like 10 credit cards and 2 car loans. And they figured it out. So I'm excited to see if this works. This is 3 days in the making. So if you never, were told in the past that you don't have the credit to purchase a home because you have no record of credit, don't let it stop you. Let's make an application. Let's get it in DU. Let's see if it picks up on you. If you got 12-month rental history, awesome, because you might end up being approved and you were never going to be approved before.
Yeah, that's really cool, because there are a lot of people, especially here in Palm Beach County, especially with the home prices where they've been at, and people have been sitting here renting. And let's face it, a lot of people, their rent is more than what a mortgage would be. We've always said that, you're paying someone else's mortgage. If you can afford it, if you can afford that, quite honestly, you might be able to afford a house, if you have the down payment, of course, and all the money for closing costs. But that's going to be really interesting to see. Have you been getting calls from people on that since that, or is it still too early?
It's been 3 days, Paul, 4 days. And I'm not even sure how many. Well, look, we're doing this because how many people know about it?
Right.
That's the whole thing. You got to get the message out now.
Yeah, definitely. Well, that's cool. That's interesting. And I think that will help a lot of people get to the goal of home, ownership, which is why you and I are in this business. We like what we're doing because we help families and individuals and people and investors and, everyone who wants to have that the home ownership, the goal of that and not renting. So that's pretty cool. I like programs like that will help more people. So,
hey, Paul, I think you need to take a sip here. Come on.
I take a sip.
There you go. Come on, just one. All right.
Cheers, buddy. Cheers.
German beer.
Yeah, it is good. Hey, it's almost Oktoberfest, right?
Yeah, absolutely.
So, okay. We'll keep moving along. So this is a big one you talked about. I'm really interested in you talking this to everybody. Family opportunity loans, helping your parents buy a home. How does it work?
Oh, very cool. So, there's been a lot of innovation in what Fannie Mae and Freddie Mac have been doing. And one of them we just spoke about this rental history. But what they also figured out is that there's a lot of places in this country where you have adult children like myself who may have a parent who's 70 or 80 or something years of age, and they can't afford to purchase a home because either they're on Social Security income or pension income, but the family wants them in a home, and the family, the son, the daughter, have more than enough for the down payment. At least 5% to put down. And what was happening is that we found out that a lot of these children were buying second homes with 10% down and a slightly higher interest rate, but all they were doing was moving their mom and dad into the property. And so the Family Opportunity Loan identified that and said, listen, this is ridiculous. Let's get the son or the daughter or both, if they qualify with income and they qualify with at least 5% down, they should get an interest rate that's the same as if they were buying their own primary residence, number one. Number two, they should be able to put the parents on the deed so that they get the full benefit of the tax exemption in the state of Florida, because that's what we're specifically talking about, but this is for all over the country, by the way. So you get your tax exemption and you pay lower taxes and you get homestead protection on the property. So this is a cool product because all you have to do is apply, whereas before you were putting 10% down, you were paying a slightly higher interest rate, and you were paying a higher mortgage insurance because of the fact that it was a second home, not a primary.
Right.
Now all of that has been eliminated, and it's just like buying your own home, but you just put mom and dad in there.
Wow, that's really cool.
It's extremely cool.
That's a lot of good stuff coming out this year. That is really interesting. So this isn't really on here, and I know you kind of got a couple of things we could talk about. What have been, because of this market that we've been in, and it's just been a little bit crazy and people, what is your advice to some buyers out there that they really want that house, but they're looking and they're feeling the pressure and they're like, well, should I waive this? Should I waive that? What advice, again, I know you're not giving legal advice here. So people, this isn't legal advice. This is just asking a mortgage lender, what would you tell your client, Bill? Should I do that?
Well, I listen to some really experts in the market, and these experts in the market kind of watch what has happened over the past, 30 years. And, we have a millennial boom of, if you look at the birth rates going back to the early 90s, it was huge. And now all of these children are 25, 26, 27 years old. I have one myself, he's 26. And there's this huge amount of people coming into the market that are looking to buy a home, first time. And they're there and they want to do it. So, you're wondering why there's 10 bids on a house and everyone's trying to outbid the other person, because you got two factors. You have these millennials who've come in and they want to buy. You have people moving from other parts of the country that want to come to a state like ours, that's run like ours. We won't get into that, but it doesn't snow here, so that's
right.
Cool. Yeah, you got a lot of people wanting to move to Florida. They want to live here. They want that lifestyle that you promote so well on your YouTube channel. And there's a lot of competition. There's a huge amount of competition to purchase a particular home. Now, if you had a question as to how do you put yourself first and foremost in that, and you want to ask that question, then I'll give you some ideas on what I've been doing.
Well, we did title it How to Win with a Lender. I mean, listen, if you're fighting, it's tough to beat cash. Most sellers are going to see a cash deal come in and we're like, it's cash. There's no, no appraisal. Don't have to worry about anything. No finance contingency. It's cash. So, but if you get that one buyer who's willing to say, well, listen, I'll offer you so much more over, And again, then it comes into that whole issue of it has to appraise, and then are they going to waive the appraisal contingency? And if they are, how much are they going to come out of pocket? If it doesn't, I mean, what advice would you be giving someone?
Well, so I have so many buyers that have been chasing homes for months and months and months and not getting them. And then finally they have an aha moment where they go, the buyer or the seller is only going to accept a certain amount for the house. They're not going to go lower. Somebody's going to go $1,000 more than me, and I'm not going to get the house. So what I've been seeing is appraisal contingency on the contract that says something along the lines of, I will pay I will pay the market price for the house. Let's say it's $250. We'll go $350.
Right.
$350 for the house, but I will be willing to go. And let me think for a second. Okay, so in most cases, a seller is asking more than the house will probably appraise for.
Right.
Yes.
Yeah.
Yes. Okay.
Yeah.
So if let's just say the house is going to appraise for they're asking $350, but the house may only appraise for $290. Okay, or something like that. And we're pretty sure because we have the data. We know, real estate agents know, lenders know. But if you really want the house, you put something in there that you're willing to pay maybe $10,000 over the appraised value, or maybe even $15,000 over the appraised value, not to exceed the original contract price. So
Right.
what you're doing is you're limiting yourself to that original contract price on one side. And you may have to come in with a little bit more money. If you get real lucky, you get an appraisal waiver,
Right.
and none of it matters.
Right.
And then you don't have to come up with the extra cash. That would be cool.
Yeah, and that's kind of what I've not only won. Some of my clients have won with offers like that and stuff.
That's the first deal that you found out about appraisal waivers. They were willing to pay more, and then the thing was just it was waived. There was no appraisal.
Yeah, so that's kind of what we're seeing happen quite a bit. But it's do you see? Well, okay, so kind of talking about that. Have you seen the market change as we go into this fall season? Have you noticed? For one, I've seen it slow down a little. Have you noticed it slow down?
It's interesting. You may have noticed a bit of a slowdown because I think inventory is starting to climb a little bit. And for a real estate agent, if inventory is starting to go up and it's not as tight, you might get more picky buyers, and you get people who are maybe not getting into that bidding war that they were getting into before. And on my side, what I'm seeing is I'm starting to see a little bit of relief, not a very small amount of relief from that bidding war issue that we've had, where some of my clients are putting in an offer and they're getting a contract. And it blows me away because it shocks me because I don't expect them to get their offer accepted, quite honestly.
Right.
But now it's happening. So my business has gone up a little bit as a result of that. And I think eventually, as the inventory increases, I think you're just having a blip here. I think it's going to go your way.
Yeah, no, it usually goes. It changed. Funny enough, my nickname in my old office was Mr. October, so I'm fully expecting to be busy. Matter of fact, I actually got a referral from an agent out in Alaska today, of all places. So an agent,
Alaska, cool.
Guy reached out to me. So, but so I'm sure it starts swinging back around. Let me see what other questions I might have for you. We've got a couple people on here watching, and again, this is the nice thing about this is I record these and people can come back and watch it at their own leisure. Appraisal value disputes, I think we didn't really go into that, but I mean, What else? You talked about work permits. Can a non-citizen be a homeowner? So I hear your clock going off in the background, your grandfather clock. So
Yeah, I collect clocks, and if you look in the background, and I think my picture has been degrading as we go along here, and I apologize. I don't know what it is. It's just I'm getting fuzzier and fuzzier.
It's the light. It could be the light. But if you Bill has
I'm moving the light around. It's not helping.
He has an awesome collection of antique signs. They are really cool. So let's talk just a little bit about the work permits, and can a non-citizen become a homeowner? Yes.
Great question.
Yeah.
So here you go. This is the list. And this is a great list. It's right here in my hand. So if you're listening and you want to know whether your visa that you have or your work permit that you have, you're not a green card person, you're not a citizen, but you have a visa or you have a green card. I'm sorry, not a green card, a work permit. Can you buy a home? And the answer is yes, you actually can. And there was an administration that was a little bit back before our current administration that restricted some of it a little bit. Some of it's opened up some. And that, I see the thing. If you got a question on the bottom, this is a great thing to contact Paul. Got to contact Paul or contact me or one of us, because if, they give you a quick example, eligible work permits are like A03s, A04s, A05s, A08s. I won't give them all to you, but, if you got the right one in your pocket, that means you can purchase a home the same as a green card, same as a citizen. You're good to go. You got to be employed. You got to make money. You got to contribute to Social Security like you're supposed to. There are some other rules, but anyone who's got one of these generally is doing that.
Cool. Very cool. Let's see. There's no questions. I just went back. Just my lovely wife and Stephen asked if I would do a video. And yes, Stephen, getting to you. Thank you for watching. I will try to do a video about Hidden Valley, Hidden Lakes area of Boca. I need to do more videos in the Boca Raton area. I haven't been down there lately, so I will do that as soon as possible. Thanks for asking. All right, cool. So I want to see if I can do this share screen a little bit and kind of take a look. Let me go do this real quick. Let me see. Share. And I'm going to share this, share this, share that, share. And then I need to is this it? Here it is. You can see that, Bill?
I'm looking at it.
Palm Beach County Market Snapshot. Okay, so this is the August numbers to give everyone an idea of closed sales. So you can see here in 2020 there was 1814, and you can see closed sales 1624 for this year. Look at the difference in the median sales price. So just under 400,000 last year for a single family, up to 480. In 2021, so almost a 21% increase on the properties. You can see how competitive it's been. Here a year ago, 96%. This past year, just last month, 100%. People are getting 100%, and it was because people are paying over asking. So that's just kind of gives you an idea how the market was. Here we were just coming out of really the lockdown and everything, and here's 2021, and with the market being crazy. Median days, 11. Things are moved pretty quick. But look at the inventory. When you come down here, look at the inventory that was available last year in August. 4,227 properties versus 2,369. That's a big difference. And if you jump down to the townhomes, look at the difference here between 5,300 and 2,100. That just showing you that's why there's been so many bids and so difficult to find it, because the inventory went from 3 months supply to 1.4, from 5.2 to 1.5 for townhomes. So This has to change. This number has to go up. There has to be more supply, or there's just not going to be homes. There's homes, but they're just going to have multiple offers on them. So until there's more inventory, and I don't know when that's going to happen, but when there is more homes, then it obviously gives people more choices, and they don't have to throw everything at that one house because they think it's the only property that's available for them. So, but that's how the market's been. But cool. Well, Bill, this is some good information. I think people will definitely get some value out of this. As I said, this is being recorded so they can come back and watch it. And if they have questions, they can always come back and get back up to us. But what do you think the rest of the year holds for the real estate industry?
Well, I'm going to talk about interest rates, which is different than what we've talked about. And this is important because the Fed met yesterday. And when they met, they came out and announced that they thought that they had met their inflationary goals at this point, controlling inflation here in the United States. And as a result of that, they are talking about the word tapering. Now, tapering means that they are going to taper off purchasing mortgage-backed securities in the future, because the more that they purchase, they're actually pumping up the economy. And when they're pumping up the economy, what they're doing is they're keeping interest rates low. Okay. Now, as a result of what happened yesterday, interest rates yesterday increased a small amount, but it was an increase. Today, it happened again. Okay. And so the question is, and you got to think about this, there is always a signal in the economy where interest rates either rise or get lower. And we've been in a very low cycle of interest rates for many years now. It's been amazing. I mean, you can get 2.5%, 2.75%, 30-year fixed rate mortgages at some point. That number right now is probably more like 2.875, 2.99. But if anything that just happened in the last couple of days continues, that's going to bring us to 3%. And eventually, as we move forward into November, December, into next year, you could be looking at some point 4.5% interest rates again. Now, think about the way that home values have increased. So you're paying more for a house. You're now eventually going to pay more for an interest rate. The people who are sitting on the fence, so to speak, who are waiting for that home price to drop.
You mean the ones who think there's going to be a market crash like 2008, which is
no, I don't think so. So think about what I said earlier about the millennials. They're flooding the market. They're buying homes. They're doing it all across the country. People from other parts of the country are moving to Florida, as you well know, with your YouTube channel and your business. And the demand is not slowing down. And you have high demand. You may get some stabilization of price. It won't grow at 20-something% probably in the future. It'll come down a little bit, but I don't think it's going to drop.
Right.
And the point is, if you're looking to buy a home, you got to think about interest rates. You got to think, what is my rate going to be 6 months from now, 1 year from now? It makes a huge difference. If you're at 2.99 or you're at 3.99 with a 1% increase on a $500,000 loan, let's just say, which is a normal price for a home, that's a huge amount of money that you're going to spend over the next 15 or 30 years.
I think you will agree that we always tell people don't look at the price of the house as much as or I want to find a house for 350. It's what can you afford monthly? What's that payment
If
that
you can afford
right?
it,
Like, what is your monthly payment that you're comfortable with? Because then that monthly payment can buy you, and again, it's lots of factors, but depending on what the HOA is in one area or what the property taxes are, whatever, it's going to vary, right? So
correct.
the same 350 house and in a different area. I mean, it's what you can afford, that monthly payment. So yeah, that's interesting. Well, listen, man, I appreciate you coming on and chatting with me. It's good to see you again. We'll definitely have to get in person.
One more. Yeah. Come on, do it. All right.
Hey, it's almost time for Oktoberfest, right? The German American Club, great event held every year here in the town of Lantana. I don't know with the current condition of what's going on, if they're doing it. I think they are doing it.
I have a friend that works over there. They are doing it, but you got to buy tickets in advance.
Okay.
And they are doing a smaller version of it. But yes, it's happening this year. At least it was when I spoke to her like 2 weeks ago.
Awesome. So for those of you who watch this and you're looking to come down, look up the German American Club in the town of Lantana, and they do an Oktoberfest. They also do other yearly events. One of my friends, George, is over there and works there, and they do other yearly events, but really neat place. But the Oktoberfest is really one of the better ones.
George is the beer meister. Yes,
George is the beer meister.
The beer meister. He's
the beer meister.
When you go there, you've got to find George.
George is the
best beer.
That is true. Oh man, that's a fun event. So lots of people.
I knew George. Just quick side, Paul. I knew George when I worked at the bank in like 1990.
Oh, nice.
That's how long I've known George.
George is a good guy. He bought when I met him, he's in our leads group, and he had brought me some really nice German beer. So thank you, George, if you ever see this video. But good, man. Well, I really appreciate it. Thanks for your all the information you shared here. And like the last time we did a video, it sits out there, and I still get calls on the video that you and I did way back about the what was the program that we were doing for the buy the
that was the FHA FHA condo program.
Yeah,
and you said it was not as successful, and you mentioned that, and the reason is that FHA had a great idea. They wanted to bring back 3.5% down on condominiums, and the problem was that condominium associations had to fill out a lot of paperwork and go through a lot of hoops to get their condominium approved for that program. And condo boards, they're volunteers. They volunteer, they go on the board. They're not going to do any heavy work. And when the work came, most of the condos just said, we don't need this.
Yeah, it's hard when people, first-time home buyers and people limited means, and they're looking at condos, and I tell them, listen, you got to go. I can get you a list of the FHA approved ones, but it's far and few between.
We can do 5% down all day long, just so you know.
Right.
And
that was a challenge. That was a challenge, though, finding the make sure the condo had all the finances and the reserves and everything that satisfied. Satisfied you, the lender.
Right. We worked on one last Christmas, and it was every bit of paperwork it took to get it done.
Unbelievable.
We got it done, though.
We got it done, and they're happy homeowners, and then
they were very happy.
And they got it with 5% down. So thank you for that. So
it
can be done. You just have to have a good team. You got to have a realtor who will not give up.
You have a realtor who can't give up, a lender who won't give up, and most importantly, a buyer who won't give up.
Yeah. He was great about it. They stuck through it, through all the headache, and there was a lot of headache, but they did. So that was awesome. But anyway, so good. Well, these videos are just one way for me to reach out and have my a lot of the people who are subscribed to my channel, and every once in a while we pick up some people who aren't, but they'll watch it. So I appreciate all you who are watching. It looks like we got a couple of viewers, so thank you guys for coming in towards the end of this. And any big plans for this weekend?
Me?
Yeah, you.
I hope it's not raining.
It's supposed to rain.
Is it? Well, thank you for the bad news, Paul. You ruined my weekend, and it's only Thursday.
My last video was about the reasons why you might not want to move to Florida, and one of them was the lightning and the heat And it's just, hey, it's listen, we're not in our paradise weather yet. Give it till December, and then everyone's going to be here, right? So,
Correct.
cool. Well, Bill, appreciate it, man. Thanks again. I'll talk to you soon. Cheers, brother.
All right.
All right.
Yep. Good stuff.
All right. We'll talk to you later.
Bye.
Bye. All right. Well, listen, check the questions, comments, see if we got any. Nope. Just the same questions that were here earlier. So, all right, guys. Well, I appreciate any of you who watched this. And as I said, I'm still working out the kinks. I had a little mistake when I hit the wrong video at the beginning here, but just trying to do these to reach out to everybody and bring in people, experts that can answer questions and help you guys who I've partnered with. As I said, I definitely want to get someone from the insurance field to come in and talk about homeowners insurance and all that. It's a huge factor when you're buying a house here in South Florida. Insurance is very expensive. Flood insurance, even car insurance. We are the third highest car insurance in the nation here. The state of Florida is. So that's not bragging. That's just facts. So I'll definitly do that. But do me a favor, leave a comment down below of a subject or a topic you might want to have an expert come in and talk about, and I'll see if I can work that out. And other than that, it's a little over a half hour on here, actually 45 minutes. So I promise to try to keep it shorter. So anyway, thank you guys. I appreciate you watching. And as always, when you're in the Palm Beaches, get out and enjoy paradise. Talk to you next time.